Okay, yeah, so the question that we're looking at for the additional shares, the 100,000 shares that were issued at a share price of 7.26 during the year. This transaction was recorded on 30 September 2020. 70,000 shares were bought back on the last day of the financial year, and the transaction was recorded, right? So I look through the question and then I see the mistakes that we did, right? So I'm gonna first start. Let me just do this. Yeah, I'm gonna first start by drawing out our timeline. I think our main mistake was first not drawing out the timeline accordingly, right? So what we know is that there's the beginning amount. We don't know that amount yet, right? And then we issued shares. We issued 100,000 shares at 7 rand 26, 7 rand 26, right? And then we bought back 70,000 shares at an amount we don't know, right? This was the last day of the financial year, so the timeline would be more towards that side, closer towards the end, right? But then what we definitely know for sure is that the end amount was 600,000 shares issued at 4,680,000, right? So we have 600,000 shares there, and then the amount for them is 4,680,000, right? Now the reason that this amount is at the end and not the beginning, like I said last time, is that when we go back here to the information, usually share capital, when it's like that, we assume that it's the beginning because we think that the transactions are gonna happen afterwards, right? But now here it says at the end of the financial year. That is mistake number one that we made. This tells us that it was at the end of the year, right? Now, to also make sure, if we come back down here, we hear that this was already recorded. So if it's already recorded, we already have it in the timeline, it already happened. That means this transaction has been recorded and they got to this amount after taking that transaction into consideration, right? And then there's this other one at the end, transaction was also recorded. So that means this amount here, sorry, that means this amount here includes both transactions. Therefore, it's the end amount, right? So, for example, if they had said that the issued one was recorded, but this one was not recorded, we're going to say that the issued one's amount is already part of this. And then we're going to say that this one hasn't been recorded. So we're going to say 600,000 shares minus 70 shares. And that was going to give us our new end, right? Hopefully I'm not confusing you. But then that was our mistake. That first of all, we assumed that this was the beginning amount. And then we didn't really check. Well, I didn't really check since I was, yeah. So anyways, now the second question is, how do we get to this amount, right? Let me give you an example of, here I wrote it this side. Let me give you an example of this timeline, right? Based on this, we know that it's similar, just with easier numbers, right? We know that the end amount is 100,000, right? Same scenario. They have been recorded, all of them, and then we know that they bought back at 20,000, right? And then they issued at 50,000. What is the beginning amount? We work backwards, so that would be 100 plus 20, 120 minus 50 as 170. Huh? No, minus 50. 120 minus 70, 70,000 at the beginning, right? Now, the amounts, we don't know them for sure, right? This one, say it was 100,000. Let's make it simple. let's say that this amount was 100,000, and then here they bought back, they issued each at 2 rand, right? So we know that this one at 2 rand, that would give us 100,000 rand, right? And then this end goal one is 100,000 also, right? Now the question is, how do we find the bought back and the beginning, right? Remember, it was done on the last day of the financial year. So that means throughout the year, we had the average share price increase and decrease and increase and decrease and increase and decrease. But then on the last day of the financial year, the share price was an amount. I'll call that amount X, right? Then we use this share price to buy back, to buy back these shares. But then after we bought back these shares, does this share price change if this happened on the last day of the financial year, right? Okay, it's a bit questionable, but then these are the assumptions that were made in order to answer this question, right? We bought it at average price. So I always told you that when we buy back shares, we always look at two things. We say the buyback price per share, and that is divided into two parts. That's the ordinary ordinary share capital amount, and then there's the amount that goes into the retained income earnings, right? What we're assuming in this example, right? And it's not wrong to assume, but what is being assumed here is that the buyback price and the ordinary share capital price is the same. There's no amount in retained earnings. So if we paid 5 rand for to buy back the shares, then the ordinary share capital amount is 5 rand, right? The reason why I'm saying that this is assumed, but at the same time it's not incorrect. It's something that you're expected to know, is that remember that here we're only dealing with the ordinary share capital, right? So whatever amount that is going to be reflected here for the buyback of this, the amount for the buyback there is obviously going to be this one, right? And this one is obviously going to be the buyback price, the ordinary share capital. How much must be taken out of the ordinary share capital to buy back these shares is going to be the same as the money actually paid there, right? The only time we consider the retained income amount is when we have to deal with the retained income, right? Hence, I'm saying it's an assumption. At the same time, it is something that you're expected to know. And I also forgot it, right? This is a tricky and yet simple question, right? Because the way you did it was correct, but we didn't know how you got to that, right? We didn't understand how you got to that one. So it's easy in terms of the steps of getting there is simple, but understanding and the thought process behind it is a bit harder there, right? So the average price is still the same, right? Average price is still the same there at the end of the year. Let me give you my example, right? So it's 100,000 shares at 100,000 rand, right? So if we get our average price there at the end of the year, it's going to be 100,000 over 100. And then what is our average share price there? 1, right? Now, if our average share price there is 1, and then we factor in this amount there, sorry, it's just a bit, come on, focus. If we factor in this 20,000, right? That 20,000, that means if the average share price is 1 multiplied by 20,000 shares, that will give us 20,000 rand, right? Now we know how we're working. Let's change this from 100,000 to 50,000 so that my simple example can actually be simple, right? If we know that this is 20,000, which was subtracted there, and this was 100,000, 50, and that's going to be 70,000, right? Whether we work forward or backwards this way, we should get the same amount of the average share price of 1 rand regardless, right? Now let's work from this way. This way we've already done it, we know that the share price is 1 rand. Let's work from it this way, right? So we're going to say 70,000 rand plus 50,000 divided by 70,000 plus 50,000, right? That is gonna be, okay, 120 over 120, and that is the same thing, so that gives us 1 rand, right? Those are both equal. My example is very easy and it's nothing like what we saw, but to be fair, if you look at it, right, working backwards and working forwards, we got the same amount. The confusing part is usually that after the buyback, we assume that the price would increase or decrease or something, but then after the buyback, yeah, that's the point. After the buyback, the average price is still the same, right? So, for example, back to this one. Before the buyback, the average share price, when we calculated it without considering the buyback, when we calculate the average share price for this, it's 1 rand. Correct? You agree? Right? Then we had the buyback. Fine. We had the buyback, we subtracted this amount, right? So it was 70 plus 50, that gives us 120, minus 20,000, that would give us 100,000. And then the amount 70 plus 50 minus 20,000, that also gives us 100,000. What is the average share price at the end after the buyback? The average share price is still 1 rand, because essentially nothing has happened. Essentially, we bought back the shares at average share price, so that means nothing changed. I hope you understand this, but at the same time, I don't blame you if it's a bit confusing, right? Here's the general rule. When calculating the average share price, and then you have all this, and then they tell you that you bought the shares at average share price, right? We're not considering this, the retained earnings. So there's not the above average price, right? We're not considering this. If they tell you that they bought it at the average share price, so that means that, for in this example, for every 1 share, they paid 1 rand. That is, it's as simple as that. For every 1 share, they paid 1 rand. Now, once you remove all these shares, is that statement still true? That for every 1 share, they paid 1 rand? We look at this. Yes, the statement is still true, right? If you don't understand this, go to that other video that I explained to you, and I the one on YouTube, right? Go calculate the balance at the beginning and the issued there. Find the average share price before the buyback. Don't include this. Find the average share price here between the beginning amount and the issued. Then look at the average share price at the end, right? Don't look at buyback. Forget about buyback. Look at the average share price at the end. Look at the average share price before the buyback, right? So in that example, I remember we also had retained earnings, right? So the same way, don't look at the retained earnings. Look at this amount here. I wanted to say something, but yeah. So for example, I don't remember the exact figures, but in the buyback, let's say for example it was 10 rand, and then the ordinary share capital was 7 rand, and then the retained earnings, the above average price, was 3 rand, right? Now what I'm saying to you is, forget about this amount, forget about that amount, look at this amount, the ordinary share capital, because at the end of the day, this amount is the one that we look at here. You're gonna say 7 rand multiplied by how many shares that they bought back. I don't remember what it is, so I'm just gonna say 7 rand multiplied by 50,000 shares, and that amount, which is a rough calculation, 350,000, is the one that is going to go to your ordinary share capital. When you do the note, this is the amount that goes there, right? So I'm saying focus on this, the ordinary, the average share price. Look at it on that video. That is, this pot before you put back equal to the one after. I think after that it would be more more understanding. It would click better. You would be able to understand it better, right? So now, with the knowledge from here, coming back to here, right, we have this amount. We're going to find the average share price. So we're going to say 4,680 123 divided by 600,000, right? I didn't calculate this. You can just calculate it, but I think you have. Let's say the amount there is X, and then 70,000 shares at X rand per share. That gives us a total of, you'll figure that out, and then you can just work backwards to find these amounts for the beginning, right? I know it's a bit confusing. I know it's a lot. But like you said, rather you know the how to answer these hard questions, so that if they ever pop up in the exam, you're able to do them, right? As much as the 2023 paper is easy and whatnot, knowing the fundamentals and understanding how this was done is going to assist you so much, so much. I even learned something while trying to understand all this. So, having said that, just go through this, what I was saying. The average share price of this pod and that pod are equal. Remember, this pod, you add everything before the buyback. Then this part is just the end, right? Find out how much, if those are equal. Try to understand it yourself. Try to explain it to yourself or someone else, right, to make sure that you understand it. And then after that, try finding another paper to answer. If you're good with that paper, then clearly you understand. If not, then send me a message and I'll answer it. Let me know. All right, yeah, I'll just text you on that.